guys, I'm going to try to explain what happened with the GU sentiment today. We had a 180 turnaround on the sentiment, and what I'm going to try and do is try and explain what happened. I've got a bit of a cold, so if I sneeze I apologise. So this is the radar chart, and GU stuck out like a sore thumb. It really stuck out, and so it was telling us that the retail guys were going long. Right, so that's them guys going long. However, what's worth mentioning is that this would have increased over time, like this, okay? And I only spotted it this morning, and so it's doing this, and they're going long. However, it started going long here, maybe about here. So they were incurring big drawdown, and then they increased. It fell, and we took that liquidity. And so it looks like they got paid, but actually what happened is that they were in a bit of drawdown. And what would have happened, because they added so much longs over time, like I just showed you, they probably, what's happened is that they got out a break even. So this started accelerating, sticking out on the radar chart, round about here perhaps, and this would have been their break even and profit. And so you probably find potentially that GE might fall. I don't know, it's kind of hard to say, but this is what's happened. So they started going long Monday, and hence that little spike, and the more long they went, the greater the spike was, and we caught the spike at the extreme, and we took the SLC out, and we were actually up 40 pips. We had an entry at where am I? 136.30. Yeah. And so this is where we are now. 136.30, and we did fall the low of the day. View market watch GU 13591. So we were up a little bit, 40 pips, 49 pips, 39 pips. Yeah, so not too bad. So we were up a little bit, not bad profits, and then of course it reversed on us, because the reason for making the video is that we have to understand the fundamental flows, so the forces that enact on FX. So really, this is a risk-off move. The stock markets were falling, and then we had the healthy rebound, which was to be expected if you saw my indices video on Monday. Yeah, it was Monday morning. So it was fundamentally perhaps a bad move trying to short it, although we were in profit. So if you did take it, I always recommend to put your break even just ahead of your stop ahead of break even, and so you would have been out at minimum loss. And so that's that. So this is what I think happened, is that they went long. They did actually get quite a bit of pain, but due to their terrible risk management, they actually were okay. So it's a sort of a bad lesson. It almost encourages people to have terrible risk management, because they would have entered long, and they would have been hundreds and hundreds of pips out of pocket, but yet they were okay because they averaged. Right, because they bought as it was going down. When it did finally come up, which was to be fairly expected, then they got out of profit. So it's quite naughty, Forex, because it almost teaches you to have bad risk management, because it proves that these guys actually got paid. And so what we're seeing now, we're seeing short volumes. Now this is quite a new, fresh spike. So we have a look at GU, and if you remember, I was just saying how I think was lining up for a short, and we send a pitchfork. We were below the median line. See how it respected it twice. Now we're above, and that does coincide with S1, which is now obviously support, monthly support, 13662. So, and we took out the SLC. I don't know if you can see that little blue line there. That was the old stop loss cluster, and it coincided with this fib Just had to spike a little bit below, get that liquidity, and looks like we might get the one above at 13729, and then we could potentially fall. So we are a sell at the high level, but we're perhaps coming a little bit less. See how we're dipping on the sentiment. That them going short is quite bullish. That little move there. So I think going forward, what we're going to do, we're going to source a signal from here, I think, and then we can just simply tailor it so it makes sense with the fundamentals, because we don't want to be fundamental flows, because as you'd know, the dollar would depreciate. So this is a nice risk-off move, so the dollar would strengthen. When we go risk-on, the dollar's going to weaken. So the Dixie had indeed weakened because we were risk-on, and this is the shift channel. We're in the ascending shift channel, but we're breaking the 61.8 on the half hour. On the 15-minute, we're actually breaking the shift channel completely, and it has resistance at 92.79. So what I'm going to recommend that we do is source a signal from here, but just make sure that it agrees with the fundamental forces, which we'll do as per anyway, is by the risk calculation. So if we're still risk on, which is incredibly likely because retail guys love to short the indices, then that could be like the bedrock, and we'll have a fundamental analysis as the groundwork for the signal, and then we can build on that sentiment and technical. So I think what we'll need to do is just simply have the fundamental at the forefront before we even decide what we're going to do, because if we risk on or risk off, it's going to impact everything. So by ignoring that, we're going to, we'll incur small losses. It was a 25 pip loss, which wouldn't have been too bad. But I think just going forward, we'll use the fundamental for like a bedrock, like a groundwork, and then we can build sentiment and technical on top of that, and then we can we'll profit. So obviously we were going to be risk on at some point, and so the guys got paid, but because they're retail guys, because they're in a little bit of profit, they would have exited, and they don't normally hold on to profits. They'll hold on to drawdown, and they'll average, and then they'll get out at break even. So this is what I think happened. And now what's happening, they're increasing their shorts, so we should come up sentimentally, but we have to look at the fundamentals, right? So how's the S&P, for example? Crypto rallied a lot today, so that helps the risk on picture. S&P, where are we? Here. Yeah, so this is, we've got a bullish crab, which is another way of saying we really overextended on the selling, because the D, X, A, B, C, D, is a fib from this leg, and you see how we really overextended. I think it's this one. So yeah, we went we nearly exceeded 423% on the fib, which is like quite a overextension on the selling. So this is what the crab is, telling us that we sort of overdid it on the selling. And of course, because things are going to go up, because retail guys are short, price went up, and because price went up, the dollar fell. So I think next week that's what we're going to do. We'll source a signal, perhaps not necessarily here, but from some other source, and then we'll just check, does it make sense fundamentally, yes or no, and then we can build on top of that. So it was a 25 pip loss, not like it's not going to break the bank or anything like that, but it was quite frustrating because it could have been avoided had we looked at the fundamentals. So in hindsight, we would have gone long GU, but then we would have been with the crowd. So it's tricky. So ECB tomorrow, you guys. I don't know if we're going to publish any more signals because it's choppy as hell, and it looks like the sentiment was a little bit unreliable this week, and this goes to show what happens. So it taught them to have bad risk management, and then they profit, which is terrible, because if they get encouraged to do this, eventually it will go wrong, and then they'll incur humongous losses, and they'll get, they'll blow their accounts up. So it's a terrible teacher, FX. So we'll stick to what we're doing. Good risk management, fundamental sentimental and technical, and then we'll see how we go. So let's have a look at the bubbles, and then I'll close. So we had a lot of movement on the bubbles, I think. Weekly bubbles. Weekly bubbles. Oh, it's going slow. That's annoying. Weekly bubbles. Okay, so yeah, there was a big movement. There's only CAD and Swiss that are strong buy. These have all moved. So there's a humongous amount of chop today. Yen is a strong sell. Oz is a strong sell. But that doesn't even make any sense because this is a safe haven, this is a risk asset. So it tells me just to be careful. Gold is now a sell. Euro is now strong sell going into ECB tomorrow. So it's going to be a hell of a lot of chop and noise. So I would probably just watch. Alternatively, what you could do, you could have a look at something that I've done. It's a scalper bot that I've got, which you could do. It's quite expensive. If you wanted to do it, it's basically utilising this, which is a martingale strategy, which is something that's quite risky. So for that reason, I shouldn't really recommend it. But it is an option anyway. So profile. Where are we? Purchases. This tick sniper. Okay, so it's $500, but it is absolutely amazing, and it actually got me out of GU successfully because it did this, which is very naughty. And I put the link on the video, and I can give you my history and stuff like that. It's proved to be very profitable, although it's highly risky and the stops are ridiculously wide. And so for that reason, it's not like an authorized application or something that I would recommend to put on the spreadsheet on the starter pack. But if you were looking to make a little bit of profits, this is what I've been using. But like I say, it's incredibly risky, so it's completely down to you if you want to take the risk. But there's some information there, so perhaps yeah. So that's that. So it's an option anyway. It's very good. It's made me quite a bit of profit, but it's a bit lazy, to be honest with you. I should be manually trading, but this has actually been quite profitable. So that's an option. So just a reminder, we're gonna remember to keep the fundamental forces at the focus, and then we're going to build on top of that. And we have to expect we're going to get risk on because I guess there's too much to ride. We can't have like big falls on the S&P because there's trillions of dollars at stake. So we don't really want to fight the S&P, and we don't really want to fight the risk on flows. So this is an option. It is expensive, but it's very good. And it does an averaging thing, which is martingale, which is quite naughty, and so really I shouldn't recommend it, but it's an option anyway. So hopefully my cold gets better. I'll be back tomorrow, and have a good night, and I'll speak to you soon.